far back. That was a lot of homework, wasn't it?
Yeah.
A lot of homework, okay? Teachers who really care about their students assign a lot of homework because they want you to be as great as you can be. Right, Tony?
Yep.
Okay. So we're going to spend actually the majority of today's lecture going over homework, but the nice thing is I don't think we have any homework assignment, do we? There's no homework assignment after today, correct?
Just tell someone you love them.
Oh, does it say that? Tell somebody you love them?
Yep.
Okay, well, that's very important to do. Okay. All right, so we're going to go over homework today. We're going to lecture a little bit. We'll call it a day, then there's no homework, but come ready for next time, okay? So, all right, let's go over the homework. I may go over it in a different order than what you did it, so just make sure that I eventually get through it all, okay? I think the first one I want to go through is, I believe, problem 8.1a. Is that correct? Problem 8.1a. And I think that kind of harkens back to our discussion on internal controls, which was at the beginning of this chapter, correct? All right, 8.1a. Let me go ahead and read that. Okay, for each of the 5 separate cases, identify the principle or principles of internal control that were violated. Recommend what the business should do to ensure adherence. Okay, number 1. Chi-Han records all incoming cash receipts for her employer and posts the customer payments to the respective accounts. Okay, what is being violated? What principle is being violated?
He's doing the same work.
Yeah, she's doing too many different things. So it's a violation of the separation of duties. Okay? The person who's recording the cash receipts should not be posting those to the customer accounts. No, but thank you for asking. Okay? So I can go ahead and put this up. Probably a good idea. Okay? There's problem 8.1a that we're going through now. Okay? All right, so I think that's a violation of the separation of duties. They need to add another person into that process. They need to divide it up, okay? Make sense? Okay. All right, let's read the next one. At Tico Company, Julia and Trevor alternate lunch hours. Julie is the petty cash custodian, but if somebody needs petty cash when she's at lunch, Trevor fills in as a custodian. Okay, what? And sometimes these kind of overlap a little bit, but what's violated here? You know? What is violated is the establishment of responsibilities, okay? Maria, you work at a bank. This would be like if you had one cash drawer and you had 2 tellers going to the same cash drawer. So what's going to happen when there's a discrepancy? You might say, well, it's his fault. He might say, oh, it's Maria's fault, right? You haven't clearly set those boundaries. So what's being violated here is the establishing responsibility. Now, how would you do this? Because, I mean, the person should be able to go to lunch. So how can you overcome this situation? Nathan?
Well, if you just assigned her a set lunch hour and said that you will not be able to get petty cash from like 12 to 1,
Okay.
be prepared and
Yeah.
make it known to employee company.
You could do that. There's actually an easier way, too, but that would work. How about just have 2 petty cash boxes? You have one for each employee. I mean, it's $200 each in each box or something like that. And because, you know, people are going to be sick at times as well. So then if somebody's sick, but then, you know, only that person has the key for that petty cash box. So if there's a shortage, you know who's responsible for it. Does this make sense? This is just like having, you each have your own drawer at the bank, right?
In our own keys.
Yeah, and your own keys, okay? So I would just have 2 separate petty cash funds, okay? All right, good. Next one, Nori Nizumi, it's quite a name, posts all patient charges and payments at the Hopeville Medical Clinic. Each night, Nora Nizumi backs up the computerized accounting system to a drive and stores it in a locked file at her desk, okay? Now, what is being violated here?
Divide responsibility for related transactions.
Say what?
Divide responsibility for related transactions.
Okay, you could, yeah, this is kind of one where it touches on several of them. It could be division of responsibilities. I think the one they talked about was, and this is kind of loosely, but technological controls. Okay? Now, what is the thing that could happen? What's the adverse thing that could occur by her doing this?
If that flash drive gets lost or damaged, that's the only copy you have.
Okay? And also, it's not real good to keep the backup in the same location. Okay? Like, what if the building burns down? Does that make sense? Okay? Now, this, I do actually think that this one probably needs to be updated a little bit, because we used to back up things on files like this, a physical file that you could, put in a location. But how do we back up things most of the time these days?
The cloud?
The cloud. We don't know what it is, but it's up there, right?
Secondary server.
Pardon, Nathan?
More technically, a secondary server is usually what we upload things
Yes,
to.
or something like that. Secondary
An external
server.
hard drive or something.
But it's usually not some sort of a disk that we carry around, right? Make sense? Okay. So, but I think what they're trying to get accomplished is that, or what they're trying to the point they're trying to get across is that you do want to back up your system, and you want to have it safe, in a safe location. Okay. You don't want to keep all your backups in the same spot. Because, like I said, if the building burns down, then you're in trouble. Okay? All right? All right. The next one. Ben Shales prides himself on hiring quality workers who require little supervision. As office manager, Ben gives his employees full discretion over their tasks, and for years has seen no reason to perform independent reviews of their work. Well,
I'm going to go with perform regular and independent
yes,
reviews.
you are correct. That's a tough one. Ben, that is great that you are hiring such outstanding citizens, but you still need to perform independent reviews. Okay? If I had Gandhi and Mother Teresa as my clerks, I would still review their work. Okay? Because again, most of these times that people get caught doing something bad, they have no police record, do they? Okay? They have no police record. They're good, outstanding people who they would have never been suspected. Okay? And we saw that video of Bob Do, right? Okay? So you need to always review your employees' work. And I will tell you the truth. Really good employees a lot of times like to have their work reviewed, because it kind of makes them feel good. To go ahead, look at my work. I'm doing exactly what you want, and it kind of makes them feel good, right? That somebody actually cares about what they're doing. Okay.
So more of an affirmation that they're doing it correctly.
Yeah, it's an
They actually care
affirmation that
about
they're
your
doing
job,
it
you know,
correctly.
make
And you
sure
say,
you're
"Hey, great job! You're doing a good job," right? Okay. People want to be appreciated. Okay. If you ever have an employee that says, "I don't know why you have to review my work," it's like, if you don't, is what, you don't trust me? Well, that would be a cause for concern. I don't want that type of employee. Okay. They don't understand the importance of this. And again, sometimes it's not for theft; it's just for mistakes or something. Or maybe there's a more efficient way they can do their work. Always perform independent reviews. Okay? Do they review your work, Maria?
Every day,
Every day?
like 3 times a day.
Even though, don't you tell them I'm a really nice person, I would never do anything wrong?
Yeah, but like when sometimes we just forget to scan something and
Sure.
the supervisor's like, "Oh, you forgot to do this," and
Exactly.
it helps us because then we don't have proof calling us, "Hey, that's not correct," and that's embarrassing because then they have to call us. And
Exactly. Yeah. It's not just for theft, it's for discovering errors or maybe figuring out a better way to do it. So, very good. Okay, last one. Number 5. Carla Farah's manager has told her to reduce costs. Carla decides to raise the deductible on the plant's property insurance from $5,000 to $10,000. This cuts the property insurance premium in half. In a related move, she decides that bonding the plant's employees is a waste of money since the company has not experienced any losses due to employee theft. Carla saves the entire amount of the bonding insurance premium by dropping the bonding insurance. Okay, what does this violate?
Insure assets and bond key employees.
Yeah, insure assets and bond key employees. Okay. Now, it actually might have been an understandable and a wise move to raise the deductible. There's times that we do that, but to not bond your employees, that's crazy. That's crazy talk, right? This would be like if I said to my wife, "Honey, you know, we have fire insurance on our home, but have you noticed that we've never had our house burned down? Okay, I'm going to get rid of it." Okay. Well, that's crazy, right? That's great that you've never suffered a fire, but you may suffer one in the future. This is actually, getting rid of your bonding employees is actually crazier than that crazy example, because you may not have suffered any employee theft that you know of. You may not have suffered any, but that may have become because they knew they were bonded. And they did know that if they were caught, the bonding company would come after them, right? So I think we can all agree that that's kind of a silly logic, isn't it? You need to insure your assets and bond key employees. Okay? Questions? All right. Let's go through problem 8.4a. I think it was requirements 1 and 2. Okay? All right. Now, this one's a little bit more difficult one, isn't it? Okay? This one's a little bit more difficult. And, you know, whenever you do these bank recs, again, try not to get too wigged out about it, but just say, okay, what do I know? Well, I need to start with the bank statement balance and the book balance, and then I need to just look at these reconciling items, ask myself, so which side do they appear on? They're never going to appear on both. It's just going to be one, okay? Did anybody get an adjusted balance on problem 8.4a? Anybody? What'd you get? Anybody?
Yes. 34, 602.
Very good, Mai. That's nice work. She said 34,602. So let me show you the answer to that. It looks a little bit like this. Start off with your bank statement balance. Start off with your book balance. Go through reconciling items. And you have an adjusted balance on each side that equals 34,602. So that's what you got there, right, Mai?
Yes.
Okay. That's a little bit more of a difficult one, okay? You can tell that I think bank recs are important, correct? Okay? You can tell that I think that bank recs are important. As a matter of fact, for you folks here face-to-face, at the very beginning of the next class period, we're going to have a quiz over bank recs and the journal entries. Are you with me? Okay. Now, obviously, you folks at home, I can't give you that quiz, but I am going to put the quiz on the screen so that you can take a look at it and perhaps try to do it at home. Okay. So we will have a quiz over bank recs. This is probably a little bit more difficult a one than I would give you for a quiz, but take a look at the answer again. Does this make sense? Are there questions there? I mean, it's the same sort of items. Now, you can see here, Maria, last time we were together, I think you asked about how you wanted to detail out the outstanding checks. Here they actually listed them individually, right? That's probably the best way to do it. Or at least if you just put a total, one of the supporting documents that you'd have behind your bank rec is a list of what your outstanding checks were. So you can see if those went through the system the next time you do a bank rec. Okay? Deposit and transit. It's the same sort of items, isn't it, that we're used to seeing, but it was worded a little differently. It was a little bit more difficult to figure out what was outstanding as far as the checks, correct? Had to go through a little bit more, jump through a few more mental hoops, correct? Okay, but that is the answer to that. After that, we have to do journal entries for the book side. Those are going to look a little bit like this, okay? So those are the 4 journal entries you make. You may have debited bank expense or miscellaneous expense. That's fine. There is some wiggle room in the accounts, but those are the 4 journal entries. Okay, I didn't read through that whole problem, obviously, but that's problem 8.4a. Okay. Questions on that, folks? All right. Okay, one thing I want to show you before I forget is in your handouts, folks, I do want you to know, please take note that there is this separate extra practice, okay, for Betsy Doe Company. We're not going to go through that in class. We're not going to read it. You're not going to ever hand it in or anything. But I just want you to know it's out there. And then I think the answer's on the next page, okay? So if you want a little bit more practice doing bank reconciliations, please know that that Betsy Doe reconciliation is in your handout. Make sense? Okay, cool. All right, let's go through, let's do quick study. I believe I assigned 8.7 and 8.8. Is that correct? Okay, so let's do those. Quick study 8.7, quick study 8.8. All right. Quick study 8.7, right here. Okay, an entrepreneur commented that a bank reconciliation may not be necessary as she regularly reviews her online bank statements for any unusual items and errors. Okay, describe how a bank reconciliation and online review or reading of the bank statement are not the same thing, they're not equivalent. And then identify and explain at least 2 frauds or errors that would be uncovered through a bank reconciliation and probably would not be uncovered through an online review. Okay? All right, now this one is in here because you can come off that. Sometimes people say, well, I don't do a bank rec, but I do look through the online, detail, or, heck, you can get it on your phone, can't you? And I just make sure that everything's okay. Well, that's good that you do that, and probably a nice step, but that's not the same thing. That's just looking for something really weird, right? And if somebody in, Paraguay has spent $4,500 on electronics on your account, there's probably some sort of fraud going on, right? And that would stand out like a sore thumb. But that's not the same thing as doing a bank reconciliation. A bank reconciliation is, again, not just something we do, but something we prepare that somebody else can look at, right? Okay? It's a very formal reconciling of our books to what's happening in the bank. Okay? So what are some things that, what are some errors or frauds that you would not uncover by just perusing your online detail that you would if you did a bank rec?
You changed the numbers on a certain check, and it was only by a little bit. You probably wouldn't catch it by just looking.
Very good. That's very good, Carl. What he's saying is, okay, let's say, and it may not even be a little bit. Maybe that you wrote the check for $2,400, and it went through the system at $4,200. It was a bank error. Well, you're not going to remember every check that you wrote, right? Now, you might go, okay, well, we work with that vendor a lot, so I'm sure that that disbursement is fine. Well, it was for the wrong amount, right? I mean, you're talking about companies that write dozens, even a small company writes dozens of checks a day. You're not going to remember every amount, just know if it's correct, right? Good. Anything else that you might not detect? Maria?
Insufficient fund checks.
Bounced checks? Okay. Yeah, that might not be something that is easily as detectable. Okay. Nathan?
I'll say from a consumer standpoint, like a small charge at a place where you'd regularly go, like if you got like a $10 charge from Quick Trip on like a debit card or something, you might not notice that if you go there every few days to fill.
Right. Yeah, again, it's that frequency, isn't it? Mm-hmm. Okay. Another thing that you know what an error of omission is? An error of omission is the mistake is it's not even listed. Okay? So maybe you made a $800 deposit and it doesn't even show up on your online activity. Well, I doubt you're going to be astute enough to know, now wait a minute. Because again, a company makes a lot of deposits. Wait a minute, I made this deposit on that day and it's not listed here. Nothing's going to jump out at you when you look at your online activity that is a mistake. Does this make sense? And again, I think I explained, and with one of my clients, I found a $10,000 deposit that they had made that had gone into the wrong account. Okay? So you have to do a bank reconciliation. A company, you should do them as individuals. I've been doing them for myself and my family for 30 years. But you definitely need to do them if you're a company. If you're a company and you're not doing bank recs, you're not going to be around long because that's just such a key point of internal control and cash control. Okay? All right, questions? Okay, let's go to the next quick study, which I think is right after it. This is asking about the days sales uncollected ratio that I believe we discussed last time, right? And they want us to calculate this. Is it improving? Is it getting worse? What's the situation? So let's take a look at the answer to that. Okay? All right. First of all, look to see if you got your numbers correct. If you calculated them right. Okay. Did you get, for 2016, 15.5 days? For 2017, 14.6 days? Did you get that? Okay. It's moving from 16 to 2017. So it went from this to this. Okay. So, all things being equal, are we happy or are we upset about this decrease? Is that a positive trend or negative trend? It's good. It sounds like we are collecting them almost 1 day quicker than we were in the previous period, right? That's good. Okay. We don't know why this is the case. Maybe we have a credit manager or a receivables manager that is really on the ball and she does not let things get old. She calls accounts right when they start to get past their due date. Maybe we have new credit terms that are more favorable and encourage people to pay their amounts that we're owed quicker. Maybe the economy is improving. There could be a number of reasons that this is improving. Okay? But that's good that it's trending in a positive direction. Okay? All right. Any questions on that? I think that's it for chapter 8 homework, right? But I believe I assigned an exercise in chapter 9. Is that correct? Okay, 9.1. So let's take a look at that. And I think what this talks about is, well, let me turn to it first. Going to something that we worked on or lectured on last time, we talked about how, let's look at this again. At a certain date when a company has accounts receivable of like $10,000, certainly that's the amount that's in their accounts receivable at that given time, right? But there's this subsidiary ledger or subsidiary detail that always has to back up and support that. The sum of your subsidiary detail or ledger always needs to equal what's in your control account, correct? So, in exercise 9.1, what are they asking us to do? Well, they're saying, let me blow that up a little bit. Okay. Exercise 9.1. Vail Company recorded the following selected transactions during November 17. And they give us these 5 journal entries. Open a general ledger having T accounts for accounts receivable, that's the control account, sales, sales returns, allowances. Also open an AR subsidiary ledger having a T account for each of its 3 customers. Now, when you post anything, whether it be a debit or a credit to AR, you always have to affect the control account as well as the appropriate customer accounts receivable, correct? So that's what they're trying to get across. And then when we're done, they want us to prepare a schedule of accounts receivable and compare the balance in the subsidiary detail account with the balance that's in the control account, okay? So that's what they want us to do. Now this is always kind of a hard one to, this is an easier one to do if I have whiteboards all across the classroom, but that's okay. What we need to do when we post these journal entries is we need to go line by line. And we say, okay, we need to go debit AR. We need to debit the control account for 4615. But then we also need to affect the AR specifically from Ski Shop in the subsidiary detail. And we need to debit it for 4615, right? And then we need to credit sales for 4615. And you do this chronologically, okay? And people go, well, how else would you do it, Krug? Well, sometimes people just look at it all and they go, okay, I'm going to do all the accounts receivables, and then I'll do all the sales, and then I'll do the sales return. And they invariably forget one. So whenever you do posting, you want to just go line by line and make sure you're posting it everywhere it needs to be, okay? After they do that, here are the T accounts. Now this is the general ledger. This is the subsidiary detail, okay? Or the subsidiary ledger. That has all the customer detail. Now, this is a pretty simple example because there's only 3 customers. But you can see with most companies, your subsidiary ledger would be a lot of customers, correct? Hundreds, if not thousands. Okay? So, when we debited, for example, that first line of accounts receivable Ski Shop for 4615, we had to take that to the control account. Let me go ahead and make that note. This is called the control account. We need to debit the control account for 4615, but then we also have to go to the Ski Shop and debit it for 415, right? 4615, I should say. Okay? You with me? Because what you want in the end, at the end of November, well, what's the ending balances? 623, 1350, 7328. We want those 3 numbers in yellow there to equal that number right there, correct? The total of the subsidiary ledger, if we sum up all those amounts, they need to equal the control account total. And we can verify that by doing what they call a schedule of accounts receivable as of a certain date. And we can see that the total is in fact 9301. Okay? But whenever you credit or debit accounts receivable, you have to take it to the control account and to the appropriate subsidiary detail. You can see on November 21, let's see what happened. November 21, when we credited an accounts receivable, we had to credit the control account and we had to credit the appropriate customer account in the subsidiary ledger. This make sense, folks? Okay. All right. Questions on that? Any questions? Okay, let's go through just a few slides and then we'll call it a day. Okay, now we're talking about, let's go over to the computer. We're talking about Chapter 9, Accounts Receivable. Again, this is the amounts due from customers. When we make a sale, we're going to receive their money at a later date, okay? Now, one thing your book does that I think is kind of weird is one of the first things they do is they talk about credit card sales. I don't want to talk about that right now. That's not pure accounts receivable, okay? So let's not think about that yet, okay? Let's hop over to, let's talk just a second about installment accounts receivable. Now, installment accounts receivable is just when we're going to receive money from customers, but they're going to pay us off in a series of installments. So maybe they owe us $3,000, and we've agreed that they're going to pay $1,000 per month for the next 3 months. And maybe we'll charge them a little interest or something, okay? That's an installment receivable. Now, we're going to talk about bad debt expense. What is bad debt expense? Okay, well, come off that. Again, let's define what a receivable is. A receivable is when we provide a product or service to a customer. They're going to pay us at a later date. Now, we go ahead and book the revenue because we provided the product or service, revenue recognition principle. And we book the receivable, which is an asset, on our books. There will be times that customers don't pay us the amounts that they owe us. And we're going to talk about how we record this. This is called bad debt expense. What are some reasons customers may not pay us? Okay, they don't have the money. Now, have you ever done collections, Maria? You have. So, like, what type of things do you collect on?
You could not if you send someone to collection, it's not worth sending them to collection for like $32 or like $4.
So what do you call up the person who owes the money and say, hey, you owe this money, or talk us through that?
Well, like if a account's gonna be charged off, we like calling our customers, hey, your account's about to charge off. You want to do payments? That way we don't have to send you to collection, and then we have to get the paperwork run through, and then the collection company sends someone, brings us a paper that we fill out and send it in.
And so one of the reasons you're saying that people that may not pay, though, is they just say, I don't have the money.
Yeah.
Right? And sometimes people don't have the money. They might say, you know what? I fully agree that I owe you this money. And the product or service you gave me was a good product. Unfortunately, I've lost my job.
Yeah.
And I don't have the money. You can come over and you can look through the cushions in my couch, see if you can find some change, but I don't have the money. So that's one reason people don't have the money. What's another reason they may not pay?
They ever disagree on price? Or
They disagree maybe on the price or the quality. Maybe they say, hey, you know, I know you installed a sprinkler system at my house, and I know that you say I owe you $2,000 for it, but this sprinkler system is horrible. There's leaks all over in my yard. You did an awful job. I'm not going to pay you. That could happen, couldn't it? Okay? Or they said, you're saying we owe you $2,000. I never agreed on $2,000. I thought it was going to be $800. Well, that's when hopefully you were smart enough to provide an estimate, written estimate that was signed and everything. But there could be a disagreement on the quality of a product or service or the price. Very good. What are some other reasons people may not pay? What are some reasons people have told you?
They have other like yesterday we had someone come in and they're like, oh, I have money, but I'm using that for like this medical thing I have, or
there are other bills I'm prioritizing above yours, like medical bills. Okay? Another reason that they may not pay is maybe they're dead. Right? Correct? I mean, spoiler alert, I hope I'm not giving you bad news, but everybody dies at some point, right? Okay? There's a good chance that when you die, you might owe somebody some money. Have you ever tried to collect on an amount and the person was dead?
No, not
Okay.
yet.
Well, it happens. Now, obviously, you're not going to reach the person that's dead, but you might call a family member and they say, hey, I'm sorry, Uncle Pete died last weekend. Well, you're probably going to have trouble collecting the money that Uncle Pete owed you, right?
Yeah.
Okay? So there's a variety of reasons people may not pay. Maybe the economy's bad. There's just a variety of reasons, right? Okay? Now, this is kind of a weird question, and that's the last thing we're going to talk about today. But when customers don't pay, is that always a bad thing? What I'm trying to get across is this. The way I phrase that's kind of strange, but let's put it a different way. Let's say I'm the owner of a company and Tanner is my accounting manager. And every year at the end of the year, we get together and we discuss bad debt expense. So, which we're in essence, we're discussing customers that owed us money that didn't end up paying us. And let's say that you and I have a meeting, Tanner, and let's say that you say, hey, I got a surprise for you. We have 0 bad debt expense for 2017. And I'm like, really? We usually have like 15, 20 accounts that don't pay us. We had 0, and you say we have 0. Now, does anybody know where I'm going with this? What if I said, what are the reasons we don't have any bad debt expense? And you said, Well, it's because I only extend credit to customers if they have a net worth of $5 million or more. You see what I'm saying? I mean, what can you do if you want to guarantee that you never have bad debt expense? What could you do?
Never sell anything.
Never sell anything on credit, right? You could just say cash only, thank you, right? Only cash. But what are you going to do if all of a sudden people are used to you extending them credit and you're saying no more? I don't want to have any bad debt expense. Everybody must pay me cash. They'll go somewhere else, right? Okay? They will go somewhere else. Okay? It's not all about reducing or eliminating bad debt expense. That's a part of doing business. And I will tell you, if I had zero bad debt expense, my first thought would be, we are too restrictive on our credit policy. We're probably losing some sales. Are you with me? You want to maximize your bottom line. You don't want to, I mean, would you rather have $1 million of sales and $10,000 worth of bad debt expense, or $500,000 of sales and no bad debt expense? All things being equal, you'd rather have the former case, right? Bad debt is part of doing business. You want to try to keep it to a minimum. You want to try to maintain control over it, but it's part of doing business, and the only way to completely avoid it is if you only sell on cash or you are so restrictive in your credit policies, okay? You kind of understand what I'm saying here? So it's something that sometimes just people freak out about bad debt expense, okay? Keep it under control, manage it, but we offer credit to try to increase sales, okay? All right, comments or questions? Let's call it a day. We don't have any homework, except for to tell somebody that you love them, right? Okay? So I will see you next time. You folks here, remember we're going to do a quiz on bank recs. You folks at home, study that as well. And I shall see you next time. Bye-bye.